Yo, CFAS, what's up? Christian, Tickles, what up, man? Sean, Joe, Plastic Starfish. What's up, man? I'm good. Kaiser, doing well. Doing well. Doing some awesome analysis here on Amy. Found some things. All right, let's get to it. Matt, what's up? All right, guys, make sure you're coming in here. You're smashing that like. Would appreciate that. Get some peeps in on this whole cycle deal. All right, so I posted a tweet, and for those that know the cycle song, the thing about June, and it talks about this pattern, right? The blue pattern. So I mean, that is pretty relevant to what I'm gonna cover on this video, but so on the last video, I posted something that I'm gonna go on the daily chart because that is where we're doing this study, and I'm using an ROC indicator. So this is my version of the ROC indicator, and what this does is it measures the percent change over a set period of time. So if I have this little box here, this indicator is going to set and tell me what percentage in return AMC had over this period, and where the price was trading at that point. So this is really good for confirming and spotting where we are in the cycle, because you can compare this with other cycles in the past. Sometimes, with price and structure of patterns, you're not going to clearly see just because a pattern looks a certain way and you're looking at it in the past trying to compare it, doesn't mean that we're in that cycle or anything. Sometimes this indicator does a better job spotting these cycles. Okay, so this right here is the what we use. The 120-day cycle is what we use to predict both the March run-up and the August run-up. And we were on both of them. For March, we were about a day behind on this massive rally we had. We had already predicted it prior to it. And then same thing in August. We had that fake out, the initial fake out on earnings. So both were really good little predictions using the cycle. And then not only that, but now we also have the cycle, what we refer to as the POIs, which I'm sure at this point you're tired of hearing that, right? POI, like, bro, when's the next POI gonna play out, bro? Okay, look, this is the thing about the POIs is it's not about when's the next one gonna play out. It's looking at the structure of the POIs, right? So these little volatility windows that we're looking at right now and the structure of it, we went over the code last week, which right now looks like this, right? The 101 and then 4 zeros, same thing. 101 and then 4 zeros. So this is important because for the last 4 cycles, which is almost a year now of just freaking sideways, dude. And nothing, just sideways. Boring price action, not fun. So what happens now? Like, it's pretty simple, okay? What happened to what happened to Bed Bath & Beyond, guys? What happened to Mullen? What happened to BBIG? Okay, these are meme stocks right here that you're looking at. They all went to the pennies. And you know, I shared my warning on this in all of these, that they were going to go to those levels. So how come AMC right now is trading at $5 and has not been suppressed to that level? How come all these stocks that were meme stocks got suppressed to the penny range into the 10-cent range, like highly suppressed into that range? They could get those down there because they, you know, it was easier for them to do that with plays that don't have as big of a community involved. Same with GameStop, right? You have a larger community on these stocks. Now, that's not to say anything about what my stance on, you know, the people that have the stock and want to hold the stock or anything like that. It has nothing to do with that. What this is just saying is that this stock is stronger in that sense, and it has more support and has been sustained a lot better. So that's just a positive thing, dude. Like to really think about here going into this next point of interest, because like you know, like we treat these, they're just volatility zones, and nothing here is going to guarantee upside, but that's why we track the correlation. It's just a different way to track the possibilities in the market and what we can experience here next. So that's the thing we got going on here. So all right, so this right here, the ROC indicator, I'm gonna bring it on over up here for you guys real quick. Okay. And we're looking at both of these cycles. The interesting thing about these two is one of them looks inverse, right? You can see here, and this is the craziest part, guys. You take this pattern here, we'll take the whole cycle, right? We'll flip it, and it's like a freaking match down here. Like, look at this, dude. It's fucking crazy. Like, it's literally a match inverse to it. So I've said this many times before, and I think this is like, there's a big misunderstanding on this. But for those that know, when you have a cycle and it just looks inverse on the other side, that does not mean that the POI, or the point of interest coming up to it, is going to play out inverse as well. That just means that that it's more likely that there will be a volatility zone coming up on the next window. So we've had many instances where this structure right here of a pattern is actually the AMC arc right here. And what that is, for a second here, I'm going to take this off and take that pattern and show you guys what I mean by that. This right here we use a lot for many plays that I alert on the Discord. I use this pattern for crypto. I use it for just options in the market, stuff like that, because it is a very reliable pattern. So let's come back here to the daily chart, bring this back. This is what I mean. So the inverse arc is this parabolic arc right here, is what is currently showing up on this ROC indicator. So what this is telling me is that we've been under this 120-day cycle. We've been below the average over this box, right? This massive box on an AMC. We've been below it. And we've been there for about going on 100 days. So a little bit different from the parallel channel. The parallel channel didn't show that. That's extended a lot more, and we're actually way outside of that zone. So that specific cycle, now you do have to kind of step back a little bit and not rely too much on that. But this one here, you can see that we are outside Okay, we briefly come in just like we did back here. And now we're starting to see AMC come back, hopefully green in this indicator here. So the cool thing about it is once it, in the past, at least once it goes into that green range, okay, it goes, all right? Here it turned green very briefly, and then AMC had the squeeze. We'll call it a squeeze, right? Not everybody's going to agree with that, but I mean 800%. I'm going to call anything above like 500% a some kind of a squeeze. Okay, so here AMC goes all the way up to that 25, and then here to 77, and both times it was red prior to it, and then it crossed and it rallied. Okay, same thing here. You don't have the same effect initially once you come and cross in because this was such a drastic push to the downside and then a reversal and then coming back into that channel. But here we're starting to see AMC come back, or getting close to at least coming back into that world. Okay, inverse arc, you already know what the potential is here. If it does come up all the way up here, that would be the initial step here. And why I do believe that on this next point of interest, we could experience at least a, I'd say about 100 or maybe to 150% move on AMC. I think that is definitely likely, and it's possible. I mean, a lot of these stocks right now in the market, guys, are squeezing. I mean, we're looking at these stocks that were suppressed from 400 down to the $10, right? Like Upstart or AI, right? We have a lot of stocks right now that are just squeezing. I mean, Palantir. So, like, why? Like, a lot of people are just like defeated at this point. They're like, why is AMC not doing anything? Like, this is trading sideways. Again, look at the cycle. Come back to the cycle POIs and look at this, the sequence that we have here. And the sequence is telling us that there are similarities between this massive box here and the way that the points of interest have played out and the next one that's coming up. The next one that's coming up, to me, it looks like it will be a bullish one. And this is not me making a prediction or telling you that it's going to play out that way, but it is me showing you the correlation. And that's all this is, guys. Just analysis showing the correlation. And if it happens, it happens. Great. I mean, we know that this box is a candidate. It has been in the past. And yeah, we go by that. So there's a lot. Okay, I'm gonna cover more things because this is not the only thing that's happening right now. This is just one of many things. So I also talked about, like I do like the, the people like Dave and Rico that, professor. They focus on Wyckoff and the structure of how businesses use the pattern structure on many time frames to manipulate price action and then basically let things run at a certain point when the market is ready to do that. And there's a lot of indicators you can use to sort of fit this agenda here, the Wyckoff agenda, and watch it play out and see it play. And it's, you can use this again on many time frames, selected certain windows to do that. So one thing we had looked at was the accumulation part starting in August. And the reason why I believe that would be an accurate way to look at this is because basically going into August, we had Ape just tear apart AMC basically, right? You have this other half trading somewhere else. So to me, that just seems like a fair way to sort of reset and start trading AMC all over again, right? Like the option chain was reset in August. Right now you have other shares in the market traded elsewhere. So I think that's a fair way to sort of look at this Wyckoff perspective as well. And it's not one-to-one. It is true that you can't just take a Wyckoff schematic and just overlaid on the chart, and then that's it, right? It is going to be spaced differently. It's going to look a little bit different to it here, but you can see that with some of these things that we're looking at, this is a little projection I made here a little bit ago, but things are playing out the same way. I think I had pulled this up back here prior to this run here. Now we're starting to see it come down. It hit the 5 level, and then now we're starting to see AMC pick back up and climb, right? So, you know, again, this is not 1-to-1. AMC could go all the way up here to 10, come back down, and set up in August for a bigger rally, right? Or potential strong move in August. And so the title of this video, or, you know, it's the thing about June, right? So the thing about June is, if we're going to have another cycle where we do rally up and say we go up 100% or 150%, 200%, say AMC goes up to that $11 or $10 range, based on the cycle and things and what the market is doing, I think that would be a reasonable place to put AMC in the short term. With the way that I know the market has been using AMC for many reasons, along with these other stocks in the market, my whole thing here is, no, it's not something that just happens right away. We go up to 30. It can, but most of the time, it's going to make its way up there, right? It'll go up, then immediately could get shut down, can come back down like this, trade sideways for a little bit, maybe start climbing back up again, and then set up to go again, right? It's little by little. This is where you have your opportunities, right? We talk about the projector pattern. Okay, here's a small version of it. But the more you zoom out, the more you're going to see these, what we call these opportunities, right? Like things come and go. This right here is considered the same thing. Call it a reaccumulation pattern or a projector, as we've referred to it as, because in the market there's going to be different versions of this. Like you can call it a flag. Some people are going to call it a cup, double bottom, like whatever, right? But these are patterns that we see prior to big runs, massive runs. And that's the whole thing here, is that we're coming to a point where things are actually looking pretty good for AMC because it's sustaining itself. Again, I went over Bed Bath & Beyond. I went over Mullen. I went over BBIG. All of these did not sustain themselves. They went down to the penny range, but AMC has not done that. AMC has held itself very well with the overall market. And same with GME, right? Same with GME. Look at that. GME just holding up strong, and it keeps pushing up. I mean, this is what we want to see. Ultimately, we want to see a continuation, finally some upside here following this just massive push. And with GME, the whole thing is like, it's basically at a point where it's about to cross. It's getting very close. If we started from here, started from June of 2021, just the moving average here, you can see that we're getting very close to just crossing. I guarantee you on the spots indicator as well. I'm on the 3-day, so look at that weekly chart. One of the most powerful time frames to track with this indicator is the weekly chart. I mean, just look at this, right? Immediately as we cross, we have a pink spot. This thing just dumps like crazy, right? Here's a fake out, very quick, in and out, and then now we're coming extremely close to it here. I have an alert set already for GME on the weekly chart, so whenever this crosses, it's going to alert me. And yeah, this is a test, man. This is a test for it. AMC is close. Still showing similarities between both cycles here. We had a fake out. We just kind of ride the pink curve, and then we rally. Same thing here. We have a fake out. This one is just longer. We ride the curve. We don't cross it yet. But just look at how close we're getting, bro. We're getting so close. All right, and this is my one of my favorite indicators to use with AMC. All right. All right, let's read some comments. Read some comments. What up, what up, what up? Nana, how you doing? Long time. Matt will never get old of POIs. I appreciate that, man. I'm with you. I'm with you. I think POIs are cool. They're fun. Maybe certain communities just don't appreciate the cycle world, but that's okay. You know, we know it's not for everybody. It's a very particular type of analysis, and I think it needs more, maybe a little bit more. You know, and on my part as well, I think I need to provide more, probably more lessons on how it works, the structure of it. So I need to make videos, because you know the videos that I made were that talk about the cycle are early videos from 2021. And you know that's a long time ago. I always tell people that if you do want to learn a little bit about how the cycle works, go watch the first like 10 videos, because they're all just songs, and every song talks about the cycle in a different way. So I mean, go listen to those, man. Go listen to some songs and learn about the cycle. It's fun. The cycle song will basically tell you everything about it. It's pretty simple. It's a pretty simple thing. All right, let's see where we're at in the cycle. I had some questions the other day in the comments, and I want to pull it up so you guys can see where we're at, what we're doing. So we're currently right here, and we have about 15 days. Dude, it just goes by so fast. I feel like we just, you know, we were just in our little cycle, and now it's been almost 2 months. And we're coming up to the next cycle. So it's just a crazy thing how these things happen. All right, so coming into the next cycle, which doesn't happen until June. June 1st is when we start the next cycle, and it runs all the way up until the 23rd. Okay, so it's about 13 market days where we experience that little window. Okay, and that is where I think we're going to see the next volatility zone. So what that means is, in the short term, AMC can still go up, but with the, you know, with what we talked about on the POIs, all the POIs we've had, the major ones, using the same indicator. So this one's called change. Okay, using the same indicator, and then putting your, you got to go on the daily chart for this, because we're going to look at daily, and then you put in the 13-day window, right? So that's the bars that we're comparing. Okay, all of these have at least had a 70% move, right? So that's what's important to track here is the November run, 70 or 92%. January, 800%. June, 400%. Remember, this is taking the 13 days into consideration. And then we have March, 100%. August, also about 100%. And then the rest is just flat because there's no POIs there, right? All of these are points of interest. The rest are smaller. They're about, some of these that you're looking at here that were flat cycles were pump and dumps like these, but they just didn't have enough volume to be considered POIs. So yeah, these stronger moves, this is why I'm saying that we can still experience some volume to the upside, But to expect a crazy move where like you see options go from, from pennies to dollars and more, that you're not going to see on unless we're in these POIs here. So all of these will do that to you, but the other ones, you're not going to have the same effect. It's not going to work the same way. So going up to it here, say like we go up to this is what I'm looking at here for AMC in the next few days. I think that AMC is going to come up to at least the $6 range by early June, and then that is where it's going to set up to climb up, because AMC right now is also in a massive, bro. What we might, this is like a pretty easy pattern to recognize here, but it is a cup. It's a massive cup. If you zoom out, in the making. And if you like invert the chart, you can also kind of see you can see a double bottom. You can also see a head and shoulders, which would be an inverse head and shoulders, kind of. Okay. Not a big fan of these like cups or flags or stuff like that, because I think they put that shit in play to just, I don't know, I'm weird about it, but it's there, and it's gonna the reason why I hate that, guys, is like one of the things to look at here is for confirmation that the system is like basically rigged. I mean, just look at this, bro. Like, just the amount of people that were like, including myself, right, coming into it, like knowing this was a point of interest in November of 2021, classic flag, and then rules of technical analysis. Oh, it's a flag, bro. It's gonna go up because it's a flag. Psych. It's not a flag anymore. It's definitely not a flag anymore. And then it turns into something else, right? You got a wedge, and then now you really have to zoom out and be like, what the hell is AMC doing? Well, AMC's in a projector right now. That's what we're gonna call it. We're gonna call it a projector because it's classic. It's a classic projector pattern, bro. A little hat, getting ready to fucking go up, all right? So where I think AMC is going next, realistically, if things pan out the way that I'm intending them to, say that the POI is accurate and plays out in June, or not accurate if it's positive, and it plays out in June, and it sets up to go up in August, then my target for AMC, and this is not including AMC plus APE, just AMC, would be right around that $30 range. And that's just one test. Doesn't mean that we can't go up higher than that. I just think that based on fibs, based on the option chain, based on everything to do with the market maker dragging the price down, I think the $30 level would be ideal for that, for at least a point of interest in going into August, right? I don't think in June we would get there. I think it would be too quick. But going into August, I think it's possible if everything lines up the way that we've been projecting here. Yes, and then the reverse split, all that, guys, decisions haven't been made yet, so there's still quite a bit of time for that to fully pan out and play out. But regardless of the reverse split, I don't think that is going to change the, remember, most of the time, the way this works is the algorithm is put in place, the POIs are there, you know where they're at, and then the catalyst comes next. we've seen this happen with all of the points of interest. Even the smaller ones that we've experienced, like these smaller rallies, have all came with some kind of catalyst involved. So I would expect that at least before August, we would get something on that on the reverse split. But I wouldn't get too much into the whole thing. The only thing I will say about the reverse, like if there is a reverse split and it does go through and it doesn't get blocked and everything goes, if they decide to do a reverse split, it will change the option chain. So you're going to have another August kind of a deal here, right? What happened in August where ape came at play, it completely messed up the option chain, right? People that had options and held them through and say they were out of the money options, well, they took a hit on that because that's the one thing they don't tell you about options, right? Options become non-standard. People don't want to buy them anymore because it's weird. I don't know why this is even a thing in the honestly. I think it's just a way to do stuff like this, right? To kind of reset the way market makers do things, and they kind of sugarcoat it, and they're like, oh, we're not going to push this out, like not even warn you that it's at risk. But the option chain, I think that's the thing that would change, and it would that's what I would be like worried about with the reverse split. Other than that, I mean, the price and the things that AMC is meant to do based on that, I don't think that's going to change much. No, the price target does not include a reverse split. Wherever the price goes before a reverse split takes place, just multiply that by 10, and then you have to make that conversion as well with the ape coming into the equation as well. So all of that has to do with where the price would be. But I would say, say that AMC goes to 30, right? Say it goes to 30. Well, then if they did a reverse split at 30, which I think that would be really weird for them to do that, but if it does that, then it would go all the way up to 300. Rarely do you see reverse splits in the range that we're currently trading at. Reverse splits most of the time happen when stocks go below the dollar level. So that's another thing to look at and just be weary of. Like, if AMC did fall below, say that in this cycle it falls below and this is an inverse cycle. Okay, so I'm going to pull them up again. This is worst case scenario, but say we have another one and say that this one's just bad. It's the worst one. This would be the first time that we have 5 in a row since the whole manipulation started, right here in March. So if this one becomes inverse, it would look something like this probably. It would, and I mean like heavy volume. Something happens and this thing just plummets or something, right? If that were the case, then I would say the reverse split would be almost guaranteed at this point, because they would just take this down completely, and then they would take the opportunity to do that, and then multiply the stock again times 10 and kind of repeat the process at that point. That would not be bullish for AMC. And I would tell you guys that because that, again, this is the same thing that happened with Bed Bath & Beyond, with Mullen, and then also with BBIG. All of them had the same thing happen. The only one that hasn't done that is Bed Bath & Beyond, but that's because they were delisted. So that's just not a thing not that it's not a thing, but it got delisted prior to a reverse split. But with Mullen and BBIG, the same thing happened. So, my hopes are that we don't get there. We're not there right now, so I'm not going to worry too much about that. I think we're pretty strong at the $5 level, and I think for something like that to happen, a major event would have to kind of come into play. Like basically AMC would have to go bankrupt, or they would have to be at risk of something, or like I mean the catalyst would have to be just insane for them to be able to take AMC here in the next couple of months from 5 to a dollar or below that. So that's kind of the worst case scenario. But again, I mean, just looking at the cycle here and the pattern and the structure, I think it's looking pretty good. It's looking pretty good that these two just, I mean, they look very similar. They look the same way. I like the odds, and I like everything else the cycle is showing us right now. But yeah, no, I'm with you on that, man. Like I'm very like straightforward in the sense that I know we you know throughout the years here, just looking at AMC every day and understanding what the cycle is doing with AMC, I'm very straightforward with that. Like going into it, I don't I don't think 30 is an unrealistic target. I think 30 is realistic if you consider everything else lining up and setting up to run to that level, right? I don't think this is going to happen in 5 days like we've experienced before, but I do think in 2 cycles it's doable. Like looking at this one back here, these two were back to back. They were both positive. So one here and one here. I think maybe this is the more likely scenario, is that we come back into this and then have, that 100% trade sideways for a little bit and then have a bigger one in August. I think that's the more realistic scenario. But, it's going to take a lot for AMC to cross all-time highs again. And I think a lot has to happen for that. Not that it's impossible, guys, but you do have to remain cautious and with just because the markets are ugly sometimes, and they don't have to play out the way that it seems sometimes, and that's just the truth. So, but still, like the opportunity of AMC going from this level to even the 30 range is I think that's pretty insane, pretty cool. Oh, here's the code. Yeah, here's the code way up here for those of you that have not seen it. 101 and 4 zeros. Okay, 101, 4 zeros. Pump and a pump. Okay, let's talk about the parallel channel. And I didn't do this on the last video, but I'm going to do it right here real quick because I didn't really get to this part specifically. Okay. But this is the parallel channel that we have gone over every year. So the thing about this, the thing about June, here is the 120-day cycle again at play. This is what we use to predict the March run-up and then the August run-up as well. Both of these were predicted using the 120-day cycle. So this channel right here is a parallel channel that runs from March all the way to, well, I've extended this all the way till February of 2024, just so you guys can see the structure of it. We have not been below, the most we have been outside of this channel here has been 120 days. So why it's the 120-day cycles? Because we fall below the parallel channel, we come back into the parallel channel, and we trade there sideways for 120 days every single time. And that's only happened 3 times, okay? So this one broke it because it didn't come back into the channel. And this was one of the things I used actually to, for the last, not the last POI, but the one before that. And it's one of the things I talked about, that if we were going to come up to that range, looking at the option chain and everything, it would make sense that because there is correlation, that we would go up to that that level and then trade sideways there for 120 days, but that didn't happen, right? So now we're outside of this zone. But the crazy part is now we're outside of the zone for the same amount of time that we were outside of this zone right here, which is twice the amount. It's 240 days. So this right here is right here. Okay, and then not comparing these two patterns at all. Like some of them, yes, they do have similar qualities. Like you can move this right here and you can see that part of the cycle here played out pretty well. The rest is just, it's not about the patterns again, guys. It's about the way the percent change is distributed through the entire pattern and how they use the cycle to hedge for all the positions that they have and they're over leveraged in. So it's just the way they distribute the patterns. In the end, they don't have to look the same. So yeah, we've been outside the same thing and then going up to it. This is why in June I'm looking at the levels that I'm looking at, because going into June, say this thing turns around here quickly and starts coming up, as long as we touch it and come up to that range, which it's very realistic that in the June run-up, like 150% or 200% is going to be about the $10 level, maybe even the 14 if it really starts to push. But at that point, we're heading into a pretty strong POI for that, but it is a POI, so it can happen. Going up to that, if we come into this channel, in this pink channel, okay, that's going to be the first time we do that in quite some time, right? So using the same cycle here to kind of use and apply it the same way, right? This is just a parallel channel showing us that. Now going into the parallel channel, that might be a little bit different because now we're not following the year cycle. This worked, okay? This analysis worked for the run-up in March. It's one of the things I talked about. But other than that, once it fell below, it traded here twice as long following this right here. Okay, so that's another thing. Okay, and then I also have, I like neatly organized everything to talk about it all, but that's one thing. And the other thing that I covered was the quad witching dates. Now, I haven't touched this, I haven't moved it, but this is basically the projection that I've had on AMC for a little bit now. And it's just showing you that with everything that we've done, the cycle analysis and everything I just talked about, now you have to look at, like, why does that even make sense in the first place? And it makes sense because the only way the cycle makes sense is because there are expiration dates for options in the market. And options are a tool that market makers use to drive price action up and down. So they use why the option chain right now has like 120,000 in open interest for puts and calls on the same strike. I mean, you ask yourself that question, like, why? Like, why the fuck? Like, is there an open interest for the same strike? Like, and they, I mean, why are they buying that? And like, because they can suppress the price action with that. It's like almost like fake shares that are just floating out there, pushing price up and down. If AMC didn't have an option chain, this thing would have blown up already to crazy numbers, in my opinion. But I think the option chain is a tool that they use to suppress it, man, to suppress it. So here is the quad witching dates. Quad witching dates are important expiration dates in the market. Not only does this affect options, it affects like everything. It affects the overall markets. And these are used specifically and have correlation with the way that the overall markets move. So we're talking, indices, crypto, everything, futures, like all of this, guys, is very crucial to the markets and the way that things drive here. So going up to it, we have an expiration in June. This is the first time that in a while that the POI lies inside, like in the window of this quad witching date. This is June 16th is the quad witching, and the peak on the cycle is the 23rd, so it lies inside of the point of interest. The only other one that I've seen here do that was the one in March, and this was also pretty intense because right after that, guys, this thing just pushed, right? They let the options expire, they hedged for the position, and then they said, all right, let's open up new options. Boom. Everybody buys, and then what happens, right? They push the price all the way down. So what happened to the buyers here, the ones that held? Well, they got screwed over, and these guys just kept all the premium, right? So volatility goes up. They sell all the options here. Market makers make new options. And then all the people that held it, now they take a massive hit because the price just plummets. So that's how they do it, man. That's how they did it in June. That's how they did it in January. That's how they did it in August and March. So that's one thing I look at here when it comes to the cycle. This is probably one of the most important things. Without this, there's no cycle. Okay, so this is how I got the targets for 30 and that I'm looking at. And I don't want anybody to take this as a prediction because it's not. It's just based on the correlations that we've seen and how the option chain works, what the highest strike is available, how the price is pushed using the option chain and everything. And I think this would be ideal. Okay. Because once you come up to these levels, guys, and all the amount of freaking options right now in the option chain, it's just crazy. But this is the part, and I haven't even gotten to the fractal part, man. This is why I'm telling you this video is like just so long. I haven't talked about the fractals yet. The fractals and the patterns are probably the last thing I always cover because I call it the cherry on top. It's like once you do everything, the analysis on AMC using the cycle and everything I just talked about, then you talk about where has this happened in the past before and what can I use as reference to confirm the analysis that you did or at least help it round out if it's already happened before with another stock or another crypto, then now the possibilities are even greater that it happens with AMC. So I have a whole thing here, man. I have the whole thing set on why I think this is possible, and the fractals part, it comes last. Always does, because there's multiple versions of patterns that I've looked at, and a lot of them call for upside, a lot of them call for downside. So I'm gonna pull some up. I'm gonna show you guys what I have for that, and then we'll talk about it. All right. And I'll answer some questions here at the end. So there's a couple of patterns that I've been tracking. So I'm going to pull one up that actually ended up playing out, and it's shocking. It's shocking that it ended up playing out. But I posted this a long time ago. If you guys remember ARPA was the most accurate AMC and freaking got moved again because that is what TradingView does. It likes moving my shit. So this pattern right here, and I wasn't for it at the time, but I tracked it, and this was the bearish case scenario for AMC ever since I think this was August, guys, that we tracked this pattern, just to show you how patterns, at least in the overall direction and structure of them, especially this one, being that it was the most random pattern I found, because this isn't even this is a crypto, but it's not even the crypto chart. It's the crypto premium index chart, which means it's basically the way futures and stuff and volatility plays a role in crypto, and it shows you that chart, and it's like inverse too. So just the chances of this is just is crazy. Now this pattern right here, Look at it. It comes down, doesn't do anything. It trades flat. So confirming that this analysis here is correct, because there's not much happening, right? No POIs, nothing. Most accurate pattern I've ever seen on AMC as far as the structure goes. 2, we also were tracking Ethereum, but Ethereum ended up straying away, and that was no longer a pattern. So there's a couple of other ones I'm tracking. One of them right now is XRP, okay? And this one here, we're going to go on the weekly chart because this one is just to track the levels, right? We're not tracking anything else. We're just tracking the levels, this one. So for this one right here, this one helps me confirm, at least confirm that the levels are pretty accurate. The fib levels are pretty accurate when looking at the overall macro chart. So you can see here there's a POI. XRP goes up and then all the way up, does the same thing, comes down, trades on this channel here. You have one POI, one that didn't play out, it's inverse, and then you have the same version of that down here. So remember, the patterns will always be distributed differently as long as the sequence is the same. It doesn't matter where the patterns are at. This right here is probably what happened in August, just in a different time period on XRP's fractal. So coming up to it here, you can see that this lines up very well with the June run-up. And yeah, the structure of it is different on the way up, but at least the levels are the same. The levels that I've been tracking are the same, right? So for quad witching, you can see that this would probably clock over to that $30 level. So this would be accurate in using and confirming that analysis. That I like this pattern. I like this one a lot. Another one I was tracking that doesn't look the same as AMC's chart, but does have similar levels is Bitcoin. So this one, I'm going to get a little bit of confusion for it, because this is an example of the inverse point of interest that we tracked. So you have AMC's chart here that is following. Right, you have the same structure right here. See how it's inverse? Pump, and then it goes all the way down, trade sideways, and then it flips. Okay, where does it flip? Okay, it flips right here. Right? There's a little bit of the same thing that I showed you on the XRP chart, but it starts to flip. Actually, it doesn't flip right there. It starts to flip right here. Okay, so that's why I flipped the chart. Now, because we're flipping the chart, a couple of things you do have to do when you flip these patterns around, but the levels do change. You do have to resize the fractal. Why? Because on the way up, this is like pretty crazy, but percentage is weird, right? On the way up, you can go up 500%. But this right here on the chart, it won't be scaled the same way on the way down. If you go down, you can't go down technically, right? 500%, because they don't equate to each other. A move like this to the downside is not 500%. A move like this to the downside is probably, well, I don't know what the math would be here, but for something like this would be, say it's $7. 7. I mean, I would need help with the math here, but going down to it, I would assume that maybe going to the dollar or maybe $1.30 would be the same short as a move to the upside from here, because 5x up here, or it would be 4x in this case, or 6x, I don't know. Percentage, man, percentages are just crazy. So you do have to scale it the same way on the way up. It's going to change a little bit of the way where the target would be at this point. So things would come down a little bit like that. And then again, this is telling me that right around that 25 moving average with everything else. And you can line it up with some of these other POIs. For example, this one here. That 30 level is good, right? So that's Bitcoin. If you just came into the video, rewind it, because this is not going to make sense. All right, so now I'm going to talk about some of the other ones, and these are these are like almost 1-to-1, okay? Some of these are not bullish, but they still show us the POIs, which is what we want. Okay, so this one, I mean, just look at it. This one is bearish, but I think it's going to flip. And it's showing us where the next potential POI is, and that would be here in June. So you can see the structure on AMC, the same fucking thing, right? Where does it stop tracking, guys? You go up, everything looks good, good. Right here, massive gap. Right here, massive gap. And right here, massive gap. Okay, so yes, all you got to do is flip the chart, and that is literally the inverse of what's happening right now, right? You start to see the structure of the chart. Again, you do have to scale it differently because of what I just talked about. And then going up to it, this would indicate that at some point in this next, going into June, which is the next POI, we would experience some upside and then a drag. At that point, this pattern is probably not going to be accurate anymore. It's just showing us where the volatility zone lies, where we can experience that volume. Okay, so that is one. I had a couple of more here. Oh, I did have, yeah, this one is another one. Again, just showing the POI, not tracking the same levels, even though it can happen, but this is another one on AMC. And then here's a couple of other ones as well. This is obviously a bearish one. And here's another one. Again, showing us the POIs. I really need to push that out, though. I need to really get that in, so that people know that this does not mean, like, dude, there's people on Twitter that think that because I overlay charts like this, that I'm calling for those levels. That is not what this is, bro. And that is why you should freaking watch the whole video and not just judge a book by its cover. Because, I mean, I get that shit all the time, bro. It's just people, bro. People are crazy. All right. So that is it, man. That is it. I went over everything. If you just came in to the video, I went over the cycle. I went over quad witching. I went over the parallel channel. I went over the fractals just now. I went over Wyckoff, the POIs, and the code on the POIs. I went over everything, okay? The only thing I did not touch base on, and I'm not going to just yet, is other cycles in the market. So I didn't go over, crypto or the market. I'm going to go over that at some point on the next video, so that this one is just pretty clean, pretty straightforward. And I'll talk about that on that. But if you do want more information, I have already covered this. I cover this every single day on the Discord. You can click the link below, and that has all the videos on there. For those that are on the Discord, I go live every single day, and I talk about this along with everything else, guys. So make sure you click the link below. Check that out. I'll be there. Other than that, guys, that is it for me today. I hope that this brought some clarity. And if you guys have any questions or anything, just leave it in the chat. I will read it, and I'll get to it on the next stream. All right? You guys take care. Bye-bye.